Here who's speaking right now about the jobs report and about the threat of new tariffs. So we are putting our guests from American Apparel and Footwear Association on hold. Let's listen to Larry Kudlow.
He indicated in good faith a very respectful note to President Xi. We hope to continue the talks in September. We hope their team comes here. But in terms of the progress of the deal, the President's not satisfied. And so he's imposed this 10% tariff on the remaining balance. It's about $300 billion. As you know, September 1st is the start date. And we will see. I mean, look, the President himself in the gaggle yesterday said future actions on tariffs and related matters depends on the progress of the China trade deal.
So what about the EU trade announcement?
If they don't add back those concessions, is that a non-starter then for the trade talks going forward?
I don't want to speculate on anything. Again, I think it's a pretty straightforward story. And again, the President's communication on this was, I think, quite respectful. And he and President Xi continue to have a very strong and positive relationship. The President would like to see more progress, faster progress, and so forth. And beyond that, we will see. It's not for me to speculate on any of these events.
Larry, how concerned are you about the U.S. and Asian markets' reaction to the surprise tariffs announcement by the President?
I'm not concerned. Our stock market has been incredibly strong. We're up near 20% year to date. It's a heck of a move. And I would also add one other point. People worry about the impact on consumers and so forth. As I've said in the past, any consumer impact is very, very small, minuscule. By the way, consumer spending and consumer wages and salaries and consumer savings are all booming. It's the strongest part of the economy. So, that's the underlying fact. And I would also add, in economic terms, we believe, and we've looked at these numbers again and again, that the economic burdens have fallen most heavily on China. They've had to slash prices to try to compete. That has done damage to their profits and their companies, and their economy is in a very big slowing mode. There's also a lot of shift in production and supply chains out of China. It's doubtful that they'll get those markets back. So I think the impact has fallen very heavily on China, and our consumer sector remains strong. I'm just saying that's our analysis.
The Secretary has said that by design, the consumer impact was built into this last round of tariffs. Now, this would hit smartphones, toys, apparel, footwear, going right into the Christmas shopping season. So what have you communicated to the President that the economic impact would be if this were to go through?
We still think it would be de minimis in the aggregate. We'll look at how the tariffs are structured this time around, as USTR is going through that now with the help of our economic agencies. So we will see. I think, generally speaking, heaven forbid we should talk about today's jobs report, but it was a very good jobs report. People are flooding back into the job market. And in some of the numbers here, I tend to focus on the granular aspects. You've got something like 370,000 people entered the labor force. Last month it was 335,000 in ballpark. I hope I'm close to the truth. That tells me not only is the economy strong with a low unemployment rate, but because of the increase in salaries and wages and compensation, people are coming back. That's rare, but very, very positive. There are also new opportunities for retraining and reskilling from my program put forth by my colleague Ivanka Trump. And we are in very good shape. I'm looking forward to a very strong second half going into 2020. So I would just say in the aggregate, I don't think the tariffs have had an impact. I think China's a little tougher position than that. Yes.
With respect to jobs, what does this tell us about underlying inflation fears? Is that overstated? And is the era of quantitative easing effectively over?
terms of its impact?
Well, the Fed has ended their quantitative tightening. That's a big step in the right direction. And they did lower their target rate. And the money market is predicting additional rate cuts from the Fed. So that's a good thing. I mean, look, our whole economy in the last 2 years has suffered from a severe bout of tight money. And it has not been helpful. Now that looks to be changing. And so our incentives from lower taxes and regulations, I think, will have an even bigger impact on economic growth. So I'm quite optimistic. I don't see any inflation, sir. I don't see any inflation. The latest government stats were showing core inflation and so forth about 1.5% or less. I look at price signals in the market. Some of these bond spreads, you're looking as low as 1.25% inflation. So I just don't see that. I know people talk about it, but I just don't see it. I'm not going to stay forever. Just a couple more. Yes, ma'am.
All right, that was White House economic advisor Larry Kudlow speaking about Trump's threat of an additional 10% in tariffs.